Before I go into this video, I just want to say none of this is investment advice, and I just want to go over a topic that I don't think is covered enough. Any opinions expressed in this video are my own and should be treated as such. Please speak to your own financial advisor on what is best for you. This video is strictly for entertainment purposes only. So today I want to talk about the 3 types of stock ownership and the ways that you could decide on how you want to hold your securities. So first, I'm going to start off with my favorite way to hold a security, and that is physical certificates. So why do I like it? First off, it's just really cool to hold in your hand. Holding physical certificates actually puts your name straight onto the shareholder register of the company you buy stock of. A shareholder register is a list of active owners of a company's shares updated on an ongoing basis. The shareholder register requires that every current shareholder is recorded. The register includes each person's name, address, and the number of shares owned. It also eliminates any third-party risk of holding your shares on a brokerage account, and it puts all the responsibility in yourself to not lose the securities. And as of right now, I believe there are a lot of third-party risks in our financial system today. Like for example with the Emergencies Act enacted by the Canadian government during the Ottawa trucker protest. This gave the banks the ability to freeze any asset without due process of the law and solely based on suspicion. Another risk is of a cyber attack, like the one Jerome Powell, Federal Reserve Chair, mentioned on December 15th of 2021.
I would say, cyber risk, the risk of a successful cyber attack is for me, always the most, one that we would be very difficult to deal with. I think we know how to deal with bad loans and things like that. I think more a cyber attack that were to take down a major financial institution or financial market utility would be a really significant financial stability risk that we haven't actually faced yet.
And I'll elaborate more on this later on in the video. And also from a possible bank bail-in scenario, where a bank bail-in is intended to rescue a failing bank by making its creditors and shareholders bear the cost of recapitalizing the bank through conversion of some or all of the bank's bail-in debt into common shares. In Canada, the CDIC covers up to $100,000 in deposits in a bank bail-in scenario. At one point, I held my stocks inside of a TFSA. I then found out that a bank bail-in scenario, the CDIC does not cover stocks or bonds within a TFSA. Right now, with the household debt being the highest it's ever been and us teetering on the edge of an inflationary recession, I believe a bank bail-in scenario is more than likely to arise within the next 1 to 3 years. How many banks? I'm not sure, but I want to be able to make sure that my wealth is protected if that scenario were to ever arrive. According to the SEC, the advantages of holding a physical certificate include the company knows how to reach you and will send all company reports and other information to you directly. You may find it easier to pledge your securities as collateral for a loan if you hold the certificates yourself in physical certificate form. Now, the disadvantages include when you want to sell your stock, you will have to send the certificate to your broker or the company's transfer agent to execute the sale. This may make it harder for you to sell quickly. If you lose your certificates, you may be charged a fee for a replacement certificate. If you move, you will have to contact the company with your change of address so that you do not miss any important mailings. I'm a long-term investor, and the best way for me to hold my securities is through physical certificate form. It probably makes me feel the less anxious out of any other form. Next up, we have the direct registration system. Now, the direct registration allows you to have your security registered in your name on the books of the issuer without the need for a physical certificate to serve as evidence of your ownership. While you will not receive a certificate, you will receive a statement of ownership and periodic account statements, dividends, annual reports, proxies, and other mailings directly from the issuer. Alright, so what are the advantages of the direct registration system? Since you are registered on the books of the company as a shareholder, you will receive annual and other reports, dividends, proxies, and other communications directly from the company. If you want to sell your securities through your broker, you can instruct your broker to electronically move your securities via DRS from the books of the company and then to sell your securities. Your broker should be able to do this quickly without the need for you filling out complicated and time-consuming forms. You do not have to worry about safekeeping or losing certificates or having them stolen. The disadvantages include if you choose to buy or sell registered securities through a company's direct investment plan, you usually will not be able to buy or sell at a specific market price or at a specific time. Instead, the company will purchase or sell shares for the plan at established times, for example, on a daily, weekly, or monthly basis, at an average market price. This is the next best thing to having your name put on the shareholder register of the company that you're investing in. Now, here is a copy of a receipt of the direct registration system. Now, this is just a receipt from my records telling me that my shares are on the direct registration system. So this is important to have, even if this is not the physical copy of your securities. And there's actually a little bit of a story to this. So what happened was I was trying to get all my shares off my brokerage account and into physical certificates, and that worked well for the first few certificates, and then at some point they were arguing with me saying that the DRS was the only available option. So every time I would request a physical certificate, they would actually put it on the DRS system. And I said this was unacceptable because I requested a physical certificate. So I didn't take this laying down and I said, this is ridiculous. I wanted physical certificates. You gave me physical certificates and I want to keep getting physical certificates. So months and months of fighting, I was finally able to get all my shares off my brokerage account, then off my DRS account and into physical certificate form. So if you want a physical certificate, you're going to have to check with your company to make sure they issue them out in the first place. And if they do, then don't take no for an answer if your brokerage decides to put you in the DRS over a physical certificate, because they don't like doing it, but they have every ability to do so. Both I find to be better options than this third type. In fact, this third type kind of scares me. And this third type is actually the most common form of security ownership across markets. It's called street registration. Street registration is when you own your stock of a company through a brokerage firm, just like many of the online brokers that you see nowadays, like TD Ameritrade, Wealthsimple, Robinhood, etc., etc., etc. What this means is that instead of putting your name directly on the shareholder register of the company you're invested with, your brokerage firm will hold your securities in its name or another nominee and not in your name, but your broker will keep records showing you as the real or beneficial owner. One of the main reasons why this is done is due to the fact that it is impossible to exchange the information of one investor to another on a shareholder register at the speed of today's markets. The advantages to street registration include, because your securities are already with your broker, you can place limit orders that direct your broker to sell a security at a specific price. Your brokerage firm is responsible for safeguarding your securities certificates, so you don't have to worry about your securities certificates being lost or stolen. Your brokerage firm may keep you informed of important developments such as tender offers or when bonds are called. It is easier to set up a margin account. And the disadvantages include you may experience a slight delay in receiving your dividend and interest payments from your brokerage firm. For example, some firms only pass along these payments to investors on a weekly, bi-weekly, and monthly basis. Since your name is not on the books of the company will not mail important corporate communications directly to you. Street registration remains the best way to trade securities on the market, as it remains the fastest way to buy and sell securities with minimal commitment. However, there is one major disadvantage to having your securities on street name registration, and it actually has a high risk of hypothecation. So if your broker were to go bankrupt, it'd be very hard for you to get your securities back and could take years, and that's if you can get back your securities. Also, a major concern of mine is a cyber attack on the financial system, with the news of a data wiping cyber attack being used against Ukraine by Russian forces. I personally do not want to risk having the records of my ownership of my securities wiped from the brokerage firm's database. However, that's not my biggest concern with street name registration. How street registration works is that everyone that holds their shares on a brokerage account, they are labeled as the beneficial owner, with the nominee account holding the rights to your shares in the company. This is written on Wikipedia under street name securities. The phrase street name securities or nominee name securities is used in the United States to refer to securities of companies which are held electronically in the account of a stockbroker or bank or custodian. similar to a bank account. The entity whose name is recorded as the legal owner of the securities is known as the nominee owner, and that entity has ownership rights in the security. The nominee owner holds those ownership rights on behalf of the true economic owner, who is referred to as the beneficial owner. In the US, Seed & Co., a nominee of the Depository Trust Corporation, the DTC, is typically the largest stockholder of a company. In the US, where Seed & Co. is a street name holder, therefore all beneficial rights such as voting rights and dividends flow first to the nominee holder Seed, and then are passed onward, and ultimately to the beneficial owners. Another name for this method of holding shares is to hold your shares in a nominee account. And what is Seed & Co.? Seed & Co., shorthand for Certificate Depository, is a specialist United States financial institution and processes transfers of stock certificates on behalf of Depository Trust Company, the central securities depository used by the United States national market system, which includes the New York Stock Exchange, NASDAQ, and other exchanges, together with associated clearinghouses such as NSCC, FICC, DTCC, and others. Seed technically owns substantially all of the publicly issued stock in the United States. Thus, investors do not themselves hold direct property rights in stock, but rather have contractual rights that are part of a chain of contractual rights involving Seed. And in Canada, CDS & Co., Canadian Depository for Securities, is the major nominee account with the rights to Canadian securities. And for the reasons above, I will not hold my securities in street name registration ever again, as I do not want to be the beneficial owner to my stocks. I want to own them outright. I want to be on that shareholder register. And in regards to the direct registration system, I don't think I could ever trust putting my securities on it based on this statement by computershare.com. DRS simplifies and streamlines share ownership and investor relations for your security holders and your organization. DRS has been in use in the US market for over 10 years and is supported by the Securities and Exchange Commission, the broker-dealer member of the Securities Industry and Financial Markets Association, the Depository Trust Clearing Corporation, Canadian Depository for Securities, and by the three national US stock exchanges, NYSE, AMX, and NASDAQ. However, it seems there's starting to be a forcible shift away from physical certificates, as the Central Securities Depositories Regulation has set a deadline of 2023 for ceasing the issue in paper form of most newly publicly traded securities, and a deadline of 2025 for the dematerialization of existing paper shares for publicly traded securities. These certificates will need to be replaced with an electronic form of holding shares. However, that doesn't scare me for the time being, as I even wonder if they can make that forcible shift on investors. If the investor chooses to hold their shares in paper format, they should be given the right to do so. Even though it's a piece of paper, it still holds value, as I believe the paper form is more of a concrete piece of evidence that you own your stocks outright than a digital counterpart ever could. And I don't think that could ever change. Well, that's my video for today. Thank you for sticking around to the end if you have. Remember, like this video, subscribe to this channel, and did I say like this video? Yeah, absolutely. Like it again if you haven't. And just last week, I released my video on my economic outlook for the next decade. So if you haven't watched it, please do, and please like that video as well. And I will see you guys in the next one.